Occidental Petroleum Corporation is now down 25% in the last year, and the greatest investor of all time, Warren Buffett, is taking note. Now, he hasn't only been adding shares to his portfolio of OXY in the last few months, he's been doing it for the last 5 years. He's been buying shares nearly every single quarter, and right now it's estimated that his average buy price is sitting at $54.20. Now, what's interesting about this is the stock is currently trading at $48.84. So the current share price is lower than Warren Buffett's average purchase price. And in a recent interview, Warren Buffett actually stated he may or may not be buying more shares. I'll go ahead and play the clip.
Well, it's an interesting subject, I'll put it that way, and we will not be making any offer for control of Occidental, but we love the shares we have, and we may or may not own more in the future, but we certainly have warrants on which we got as part of the original deal, on a very substantial amount of stock at around $59 a share, and those warrants last a long time, and I'm glad we have them.
So as of right now, Berkshire Hathaway owns around 28 to 29% of Occidental Petroleum, but Buffett did state in that clip he doesn't plan to take over completely. So let's take a dive into this stock and see what we can learn and see if there's an opportunity to buy at a lower price than Warren Buffett. If we go ahead and come up here and plug in OXY, and the data will load in. And immediately we can see we have a yield of around 1.84%, but if we pay close attention to this dividend history, what we can see is their dividend was drastically reduced in 2020 and even more so in 2021, but since then they have been increasing the dividend. Now, when it comes to Oxy, what we need to pay really close attention to is the free cash flow and the story that's actually going on with free cash flow here. Now, what do I mean by this? Well, we can see 2020 free cash flow was very low. It only came in at $788 million, which was quite a bit lower than it had been in previous years, but suddenly it spiked up and got really high in 21, 22, and 23 and 24 were relatively high compared to where it had been historically. So what's going on here? Well, one of the things we have to understand is just how sensitive they are to oil prices. You absolutely cannot invest in oil stocks without understanding this. What this statement right here is telling us is basically for every $1 per barrel change in oil prices, Oxy's annual cash flow changes by about $260 million. Now, for reference, like we just saw in 2024, they did about $4.4 billion in free cash flow. So if the price per barrel of oil went down by about $1, then their free cash flow would lower by about $260 million. That would be a significant cut to the amount of free cash flow they generate. So you can see why these companies are so dependent on oil prices. So this does beg the question, what have oil prices been like over the last few years, and what's going to happen to them in the future? Well, here's what's interesting. If we look at the last 5 years, what do you notice about oil prices in 2020? They're very, very low. They're the lowest it had been in quite some time, actually. And like we just saw in 2020, free cash flow for Oxy was extremely low. But in the following years, we can see there was quite a recovery, and it hit the highest it had been in quite some time in 2022. And ironically enough, look at free cash flow for Oxy in 2022, the highest it had been in the past decade. This is definitely not a coincidence. Now, if we look at oil prices since mid-2022, it's become a little more stable, but typically over the long term, we see a lot of fluctuation in the prices of oil. If we zoom out just a little bit more and look at the past decade, we can see we're kind of at the midpoint of where oil prices have been for the past decade. So what's the main focuses for this company going into 2025? Well, really the biggest one is seeking out strong organic free cash flow generation, which has the potential to reduce 2026 plus debt. So immediately we learn debt reduction is a priority for this company. Then we can also see they increased their quarterly dividend by around 9%, and this is news we saw come out around mid-February. It was overall a 9.1% dividend increase. But going back to that debt reduction, here's what we can see. In 2024, they paid down about $4.5 billion of debt. Now, to put that into perspective, if we jump over to my balance sheet breakdown, I've already plugged in the stock ticker. We can see total debt right now is sitting at about $27.1 billion. If we look at the 2025 cash flow priorities, what we can see is the ongoing focus, something that's always a focus for the company, is maintaining their production base, as well as a sustainable and growing dividend. Now, it's interesting they have this listed because they were certainly pretty quick to cut the dividend in 2020 when times got difficult, but to be fair, that was a very difficult time for oil stocks. I will point that out. But if we look at the current focus for the company, again, like we've already talked about, it's debt reduction and then, of course, cash flow growth. On top of this, their future priorities will be share buybacks and also preferred equity redemption. Now, due to the fact that these oil stocks are so dependent on oil prices, they can become quite volatile. There can be a lot of fluctuation in what the underlying fundamentals for the stock looks like. So for example, if we jump over to the free cash flow analysis, I've already plugged in the stock ticker. Again, like we already know, free cash flow has been quite a bit better on the back half of this decade than it was on the front half. But here's what you have to pay close attention to. If we go ahead and zoom in, come over here and look at the free cash flow margin. What is this telling us? Well, it's telling us for every $100 in revenue that the company generates, how much is actually becoming free cash flow. And we can see 2014, it's about 14%. Then we had a couple of years where it was actually negative, a few years where it looks decent, 11%, 15%. And then 2019 and 2020, it was very low. But the past 4 years have looked very good. At one point, it was as high as about 34% in 2022. Now, why am I talking about this? Well, look at how much of a difference it is in 2022 free cash flow margin versus just a few years prior when it was only 4%, and the year before that around 3%. Due to the fluctuations in price of oil, the free cash flow margin has a wide standard deviation. So what we have to understand about these stocks is the fundamentals. Again, they're going to be volatile, but they can also be extremely hard to value because you can't really predict the future price of oil. Sure, there are analysts who attempt to do it, but it's not easy. Now, if we go ahead and jump over to the stock screener, let's plug in the ticker once again. And basically all that's going to happen is we're going to reaffirm what we just learned about the stock. It can be volatile due to the price of oil. Look at the earnings per share, look at revenue per share, look at free cash flow per share. It is going up and down. Now on the bright side, if we do try to look at it from a valuation perspective, the free cash flow yield for this stock is about 10.01% if you use the trailing 12 months free cash flow per share metric. And if we compare that to the historical average for this stock, the historical 10-year average is about 7.32%. So from a valuation perspective, when you look at the free cash flow they've generated in the last 12 months versus how it's been historically, the stock does look a little bit more attractively valued. But the problem here is, again, this is more of a backwards looking metric. Really, the future will depend on what their future free cash flows look like, obviously. So what's the outlook for the company actually look like? Well, one of the things we do need to make note of is the first quarter of 2025 is projected to be a low point for production due to reduced activity, weather impacts, and planned maintenance, with a significant uplift expected in the second half of the year. So first part of 2025, production is expected to be lower, so don't let that scare you. But then we've also recently seen OXY get downgraded due to a weaker oil outlook over the next year. But despite this downgrade, all they did for Oxy was cut the price target from $81 per share to about $64 per share, which, like we already know, was still significantly higher than the current share price for this company. On top of this, we can also see there's more short interest than I typically like to see with this stock, sitting at about 4%. So what are the takeaways? Yes, it is interesting that Buffett has been ramping up his buying over the last few years and even in the last few months. And it's interesting that even after a downgrade, analysts are giving them a buy price of about $64 per share, which is still significantly higher than the current share price. But the reality is still the same. Oil stocks are extremely hard to value. Why? Because it's so hard to predict the future cash flows of the business because we don't know what oil prices will look like. And that's one of the main reasons that, for the most part, I do tend to stay away from oil stocks. Now, that being said, that doesn't mean there can't be a lot of money to be made here. For example, if you bought at the 2020 lows 5 years ago, you'd be up about 340% on your position. But if we zoom out even more and look at the past 10 years, you'd actually be down 34.5%. So here's the thing, when it comes to my investing philosophy, I don't want to make investing any more difficult than it already is. I want to buy stocks with very predictable earnings and future free cash flows. And very rarely do I have any interest in a stock that's quick to cut its dividend. So I'm not anti-Occidental Petroleum by any means. This stock just doesn't make it into what I would call my investable universe. But go ahead and let me know what you think of this stock in the comments down below if you plan on buying or selling. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.